And hello, everyone. Welcome to Power Scanning. It is September 20th, and once again today we will be looking for the most promising swing trading setups for the week and the week ahead. My name is Daniel. I will be your moderator today, and also with us today is Homa. She will be manning the chat and will be looking out for all your questions that you may have. And yeah, let's make this webinar a successful and a fun one. Before we get into it, let me ask you guys, where are you calling in from? I myself am calling in today from Kingston. It's about 3 hours west of Montreal. It's an easy to reach destination by car, 3 hours on the highway. And fun fact for also all of those who are perhaps not from Canada, it was the first Canadian capital, even before Ottawa. All right, so where are you guys calling in from? Who do we have today? We have Abdul from Austin, Texas. Hey, Abdul, how's it going? We have Tien from Garden Grove, California. Hey, Tien, how's it going? Edda from Hamburg. Edda, you're back from Cyprus. Welcome back. And I heard it's very hot in Hamburg as well. Is that true? Breezy Cyprus is being announced from Aubrey. Hey, Aubrey, nice to have you in the room. Dominic says Düsseldorf, Germany. Nice. From the Rhine, the western part of Germany. Hey, Dominic, nice to have you. Udo from Osnabrück, Germany. Yeah, nice. Hansa Rostock just played against Osnabrück 2 weeks ago and tied 0-0. Little fun fact. Keith from Scotland, from the borders to England. Hey, Keith, nice to have you. David from Delaware, 17 to 27 centigrade. Okay, oh, that's a big range. Yeah, I think it's somewhat similar to what we have here in Kingston. All right, perfect, guys. Well, thank you so much for sharing your location. Yeah, perfect. And let's get into it. So once again, today we will be looking for what's called a swing trade. So a swing trade, give or take, has a duration between 2 and 20 weeks. So it's not really a day trade which you would open and close within the same day, and also not really. Today we'll be looking at long-term investments, which you may, hold for many, many years or perhaps for a life. Today we are right in the middle of these two extremes. And the beautiful thing about what we're going to be doing today is it can be done very quickly. So we call this the 13 minutes strategy, something you can do every day, either in the evening after the market closes or perhaps in the morning before the market opens. And the idea is to use our scanner, which is very easy to use, to find setups that you are interested in. The idea is to find these needles in the haystack, these diamonds in the rough, these symbols and setups which are rare yet promising. And even though they are rare, since we are scanning through thousands of stocks, more than 5,500 symbols currently, almost or pretty much every single day, you will be finding something of interest. That's exactly the idea today. All right. So quickly, who are we? We are tradingindicators.com, and my name is Daniel, as mentioned before. I'm the guy here on the left-hand side. And about 10 years ago, Homa's in the chat today, greeting from Beaconsfield, by the way, which is near Montreal. It's in the suburbs. It's a nice residential place, beautiful place to raise kids, for example. So that's Homa's home. And I actually was just there yesterday to help her with something at her house. So she's from also from Montreal. And about 10 years ago, we have created trading indicators. And as our name suggests, perhaps we specialize in creating trading indicators. So we've built thousands of those ones for clients all over the world, but we've also spread out. So we've spread out to fully automated strategies, to trading dashboards and trading scanners. And one such trading scanner we will be using today, which is called the Liquidity View dashboard, a dashboard specialized in finding what's called technical setups. So technical setups are certain patterns on your price chart which occur over and over again, and which have certain forecasting properties. And the idea in trading is, of course, always to forecast what may happen to price in the future. So we're kind of fortune tellers in that sense, but even more so because these technical setups, they are, when picked properly, reliable or quite reliable, and they have these forecasting properties. And by finding these setups, we can then anticipate what price may do in the next week, the next weeks, or perhaps the next couple of weeks. And this is exactly what we'll be doing today. As you will see, this is going to be a simple process, as it should be. We believe that trading should be simple, but of course, you need to use the right techniques, you need to focus on the right setups, and you need to use the right tools. such as our Liquidity View dashboard. And before we get into it, please make this webinar your own. So if you have any questions, put your question into the Q&A box of your Zoom window, and Homa will be looking after those and bring them to my attention as she sees fit. I also need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups and strategies discussed in this presentation should not be construed as trade advice. These are for educational purposes only. All right, a couple of housekeeping items next. First off, maybe you've been there, maybe not, but we have recorded our Liquidity View Bootcamp on Thursday. It was a massive session. It was 3 hours long. And in this session, we have discussed and reviewed and demonstrated every single feature of our dashboard. It took us 3 hours because there's so many new and awesome features in the dashboard. We had a small break in the middle, but if you want to check it out, and perhaps if you missed it, you can now watch the recording at tradingindicators.com/bootcamp. And Homa, please put this link into the chat box. So it's a 3 hours comprehensive session. Maybe don't watch it all in one shot. Take it in parts about every single feature of the dashboard, and was very detailed. And hopefully it will answer every question that you may have related to our beautiful dashboard. Also, I would like to remind you that we currently have a sale going on for our dashboard where we offer the yearly subscription at a steep discount. We decided to extend it. Originally, it was only planned for the first 20 users. We decided to extend it for a few more users, but it's going to be running out very shortly. And with this promotion, you will get 30% off the annual subscription. And all you need to do is to go to tradingindicators.com/view and enter the passcode, or the coupon code, I should say, FLASH30. And Homa, please put this also into the chat box. And for all of you who have an annual subscription, I know there are many of you, you can still take advantage of this promotion for an early renewal. So let's say you are on the subscription for an annual plan. If you want to do an early renewal using this discount, I should actually say what it is. It's only $6.97 a year. I forgot to mention this. So normally it's $9.97. With this promotion, it is only $6.97 a year. So if you're interested in an annual renewal, you can take advantage of this as well right now. All you need to do is to send me a quick note at info@tradingindicators.com that you're interested, and I will set you up accordingly. So,
Hi, Dan. Can I say something about this?
Let's do it. Yeah.
Yeah, it's a really great deal, guys, because as you can see, we keep adding to the dashboard new features. And so what you would be doing is locking in this price for as long as you subscribe with us. So that means even next year you'll have it for this price. And as we keep expanding and adding more features, the dashboard keeps growing, but you don't have to pay anything extra. So I really encourage you, if you're interested in being with us long term, this is really a good deal.
Yeah, agreed. And some of the features that we have planned for the future, just to give you a bit of an outlook, is seasonality analysis. Something that we've been looking at for a long time. We are in the final steps of getting this released into the dashboard. That's going to be coming out. We're also going to do a much more sophisticated gap analysis. If you've joined us for in the past weeks and months, you know that I like to talk about gaps and gap fills. How this could look like. You will, see very soon also with the dashboard. So these are some of the new features that we have planned, among many other things. All right. So Gary is asking, is this going to be recorded? Yes, of course, Gary, it's being recorded, and you can actually see it shortly after at exactly this link here, tradingindicators.com/view. All our recordings are being uploaded on this page, and you can also find it on our YouTube page afterwards. All right. Two more things. We do have a Discord channel. So if you haven't joined yet, check it out at tradingindicators.com/Discord. And we do have an ebook based on the setups that we will be discussing today. Uma will put this link also into the chat. It's tradingindicators.com/power of three. And in this ebook, we are discussing our three key setups that we will be using today to find the most interesting swing trades for the next couple of days. And finally, if you have any feedback, symbol requests, and so forth, please don't be shy. Put your feedback into the Q&A box or send us an email afterwards, and we'll be happy to incorporate any new suggestions into the dashboard if, of course, it's feasible to do so. So please don't be shy. Your feedback is what drives the development of our dashboard. And wouldn't it be nice if had a feature in the dashboard which was inspired by you? This could be like your feature. You can tell your friends, hey, this is based on my suggestion. So we encourage you to do that. Now, with this, let's get started with our market review. So the I'm going to open up the dashboard if I can find it. There we go. Here we go. This is trading view, but this is our dashboard here. And this is the dashboard, the Liquidity View dashboard. You can see on the left-hand side, we do have our scanner. We're going to be using this scanner in just a bit when we will be looking for setups. But on the right-hand side, we have our charting engine. And we're going to start with a couple of key indices about what's going on right now in the markets. So starting with the SPY. So the SPY, of course, is the S&P 500 ETF. I'm going to be opening up right now. And what can we say about this? Well, I'm kind of tired of repeating myself week after week, but it is just grinding higher for all those people who said maybe September is more of a bearish month, seasonally speaking. Well, you've been disappointed. It is a very, very bullish month before. You can see where prices are right now. We are very extended, meaning we are very far away from our averages. You can see the highest average of our MA rush indicator, the fastest average is at 630. Prices right now are at 660. That's a big margin, even to the fastest moving average, not to mention the ones that are a bit slower. So prices are very expensive. No signs of a pullback in the SPY. On trend radar down here, you can see everything is green. It's a sign of being extended. I, for myself, will patiently wait for the next pullback. Hopefully, it's going to come at some point. You never know when it's going to be coming. You know it's going to be coming, but you don't know when it's going to be coming. So I'm going to be waiting for a little red patch here in the SPY before I start considering adding to my long position in the SPY. I believe that most investors should have some exposure to these indices. But right now, I will not be adding to it. I'm going to be enjoying the ride. But if we have a bit of a pullback, then this is going to be the time where you want to add to your position. Very similar picture in the QQQs. You can see it here. Prices are also extended in the Qs. In fact, on Friday, we made new all-time highs. We also finished strong on Friday, and things are expanded. But technically speaking, it's a bit more interesting in the Qs because here, you can see it here, we recently broke above a resistance level, which was established by the swing high back here in the beginning of August. We broke above it. We had a bit of a retracement down to it, and we pulled higher again. Now we are trading above this resistance level, but I do feel that perhaps we will see another pullback down to this resistance level, which could be our classic zone break retrace setup. So if we see this pullback here, this could be an interesting long opportunity to potentially enter into or add to a long position in the QQQs. So interesting picture here. But the symbol which I'm really interested in, I'm actually super excited for Monday when the market opened, is the IWM. So we don't really discuss it that often in our scanning webinars here, but the IWM is, of course, the Russell 2000 ETF. And it's at a critical moment. And I'm so curious what's going to be happening on Monday. So first off, people were saying, okay, if the Fed decides to cut the interest rate by more than 25 basis points, the IWM could be one of the indices which will benefit the most because these smaller cap companies, they need cheap money, and lower interest rates means cheaper money. This could have boosted this index by a lot. Now, this didn't happen. The Fed did exactly what it was expected to do. They cut the interest rate by just 25 basis points. But nonetheless, the IWM continued a bit higher, and now we are at a super exciting juncture. Look what I mean by this. So look what happened here. When was it? In November 2024, we came up to the swing high here around the 200, 40 area, then a huge pullback, a huge correction down to all the way down to 170 because we lost a lot of percentages down here. Then we recovered, slowly grinding up pretty much a straight line upwards, upwards, upwards. And guess where we are right now? Back at this key resistance level. And, let me scroll back a little bit further to show you how significant this level is. I'm going to go back further and further, all the way back to 2021. I have to go even further back. Where's it? There we go. There we go. 2021. We were at this level as well. You see it here? November 2021. We established this high. Huge bounce of this level, all the way down to 160. Then up again. Massive bounce off this level. And now we are once again back at this level. I'm so curious to see if we may see another huge bounce off this level, to the extent that I'm even considering, from a speculative point of view, to look at some put options on Monday just to speculate. Maybe we're going to see another bounce. Of course, we are bullish. Of course, all the other indices are going up. Of course, there's a good chance we're going to break this level. But just to speculate, perhaps some out of the money put option, why not? If you see another huge bounce, this could be a massive trade afterwards. So, of course, very well risk managed, very well knowing that it may not work out. That's against the overarching trend, which is bullish. I may be looking into some puts, speculating we may see a bounce of this key level. But of course, if you break it, should we get above it? Yeah, then I think things look very bullish in the Russell, and we may see much higher price levels afterwards. All right. So that was the IWM. So super exciting and things are happening there. What about gold? I was partially excited at gold. When did I say this? I think I said it on Tuesday in our lunch and learn session that gold excited me a little bit when I saw this little red area. You can see it here. I think that was on Thursday. It doesn't matter. We pulled back a little bit, but then on Friday, of course, we came up again. I was really hoping to see a bit of a deeper pullback in the GLD, hoping that this could be an interesting long entry opportunity. Right now, it's still super expensive here. We are extending. Look how far we are away from our broken resistance level and also our first MA rush level. So unless we see at least a level 3 pullback, I will stay on the sidelines in the GLD, just enjoying the ride. I have a small position build up gradually in gold. So, new high levels are good for this, obviously, but I will not be adding to it until I see a pullback, until I see a bit of a correction to a lower price level. I think prices are extended there. I think the chance of a pullback are high. It's, again, once again, it's not only a question of when it will happen, not a question of if it will happen. This pullback will happen. Ideally, back to this first MA rush line. Look how beautiful this has worked out in the past. All these little pullbacks to the first MA rush line, they have been immediately bought up and prices went higher afterwards. Here we have one, here, 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 and so forth. So we're far away now, but if we come back, this could be an interesting long idea for gold. Now, what about oil? So oil, I'm going to keep it very short. Same as every week, just really boring. Sideways price action. Oil is something I will only get interested if we get near the extremes at 83 up here, or down here around the 60 price level. At these levels, you may speculate, okay, we're going to bounce off these levels to the middle in between these two levels, but right now we're just caught in the middle. Nothing going on here. So oil has been in this sideways channel. You can see it here, this big sideways parallel channel since 2023 and even earlier. So I believe that we may see another bounce once we get to the extremes, but right now we're really caught in the middle, not much going on there. So I'm going to be patiently waiting until we go either to this lower level or the higher one up there before to make any trades in oil. What about Bitcoin and BTC? All right, so Bitcoin did what we wanted it to do. Is, of course, if you're long Bitcoin, that's probably what you wanted. It held this key level, and not just this, it even grinded a bit higher. So the key level was around 109, 108,000. And this resistance level here and this support level down here, this has held. And now, once again, it may be approaching or maybe reattempting to test the all-time highs here at 124,000. So price right now is right now in the middle. Beautiful bounce off this level. And yeah, if we continue to grind higher, I think next stop really will be the all-time highs at 124,000. So this is encouraging to see. And let me quickly see what's going on right now in the live market. Of course, Bitcoin is trading 24/7, meaning it also trades on the weekends. So right now prices are a bit lower at 115,000. Nonetheless, it is yeah, encouraging to see what's going on with Bitcoin right now. Alrighty, so this was my market review. And Home, before we move on to the trades that we picked last weekend with a review of these trades, are there any questions right now?
We have an anonymous attendee that's has a question here. Is there a different way to set the layout? It's an effort to
Yeah,
change all the settings when you have a lot of them on the same chart or columns.
it is, and there's many different ways to customize the scanner. So, for example, you can enable and disable some of the columns here in our column configurator. You can also just make the scanner a bit bigger. You can see it here to see it a bit easier. What's going on, and of course, you can also. One thing I didn't mention is that we have a new feature, and you can fix the first column. So you can scroll over the first column here. The symbol column will stay put where it is, and then you can just scroll for the rest. So this feature can be enabled via the freeze symbol column setting right here. And of course, we do have the bootcamp where every customization option of the dashboard will be discussed. So check out the bootcamp for a full overview of what can be done.
A follow-up question about that. What about saving the layout?
It's remembered to some degree in a sense that we remember which columns are selected. That's remembered. It's also remembered which settings you have here. I believe the how you arrange your real estate between scanner and chart, this is currently not remembered, but it's perhaps something we can add to our settings.
And we keep working on improving
Yeah.
the user interface. It's actually one of our big focuses all the time. And just a reminder for those that are newer to this, you don't need all the bells and whistles. Just try to keep it simple. Keep your layout simple. Keep your scanner simple. There's a lot of really advanced features, but when you're starting off, you really don't need those.
Yeah, absolutely. Perfect. Okay. All right. So,
Just
and
sorry, one other question
yeah.
here, Dance, maybe before. It's what is the put option trade on IWM?
Oh yeah, this is so, okay, so it's a short play on the Russell. And the idea is that, we may see a bounce of this key resistance level to lower price levels. So, of course, it's speculative. It goes against the overarching trend. And because of the speculative nature of this trade, you really want to manage your risk very wisely. And, an options trade is one way to do it. If you buy options, if you buy a put option in this case, that all you could lose potentially on this trade is the options premium, nothing more. And to me, since it goes against this, this is all the risk I would be willing to take to potentially consider an out of the money options trade, buying a put option, perhaps if a to 237 strike price or maybe 235 to get relatively cheap and then speculate. Yeah, we may bounce off this level to lower price levels. If this happens, this options contract will gain on value, and then if price comes down, you can then sell it for a profit. But again, the risk management component is very crucial here. So I would not trade this outright. I would not short the Russell outright. That's too risky for me. But buying put options where the risk is very well defined, that could be one way to do it. Perfect. Okay. So now, with this, I'm gonna review what we have picked last week, and we've been on a good streak so far. So let's see how well we did last week, and just gonna go through our picks here. We had 9 picks in our watch list. Weekly swing trades of September 13th. That was our watch list last week. Let's see how we did there. So alternation. That was our long break retrace setup. Nothing has changed there. We are right now actually in our entry zone. You can see this little rectangle here. We broke above resistance, came up, back down to it. This actually could be an interesting trade for next week as well. Nothing really has changed here. We're still like in this entry area. And the idea, of course, is that we will hold this level, this former resistance level, which will now act as support. And then we're gonna, bounce off this level towards higher price levels. So all good here. Still in status quo. Hella GmbH, a German stock. Nice bounce setup, which worked out beautifully. We actually came down a little bit further below the support level, but then this nice bounce off this level. Now we're trading in between support and resistance. So this one is in progress, working nicely. We are now in the magnet zone, meaning we are in the middle in between support and resistance. So all good there. Arista Networks, another long break retrace trade, which we didn't get our fill on, unfortunately. But maybe some of you did jump in early. My entry level or my entry area was here around 135. We didn't quite get there. We went to 139. Unfortunately, because this one is seemingly working out right now. We're seeing our bounce off this level towards higher price levels. So at least the general direction was spot on. But I thought this retracement might come down a little bit further. But then nonetheless, the setup itself worked nicely. Westinghouse Air Brake Technologies Corporation. All right. So here also, nice trade right down to this key support level. Then a good bounce off. Then we came down back on Friday again. We have to see how this one pans out. But so far, so good. Definitely in the profit right now, bouncing off this key support level. And now BSX, Boston Scientific, oh boy. The only trade which didn't work out as predicted. Um, Unfortunately, this was also the trade in our newsletter on Monday. Well, you can't get them all right. Here we did lose our support level here. We went straight down to the second support level right below, which is at this level. You can see this one here. We had some liquidity captures as well. So I think this level could be the one which is holding. If not, if we don't hold this level where we are right now, I think then we're going to see the gap fill of this bar here at 95. So but in our defense, in the newsletter that we said to scale into a position. So if you scaled in on Monday or Tuesday when we announced, I think Tuesday we're already down here, you're still in pretty good shape. Scaling in and potentially we're going to bounce off this level. And even if you only, in quotes, bounce off this after the gap fill here, this is a stock where we are, it's very nice. It's very bullish to begin with. This is a normal correction within this big uptrend. And it's just a question of where will this correctional move stop. It didn't stop where I thought it would stop. We went down a bit further to this support level here. Perhaps we're going to stop there, and if not, maybe a bit lower. But again, if you scale into it, I think medium term, this is a stock which will reapproach its all-time highs. We can benefit from this move. All right. Now, SAP worked out beautifully. So beautiful bounce off support. As you can see it here in our entry zone, bounced off, and now we're trading at much higher price levels. So all good there. And this is also a stock which is quite bullish. What else do we have? JP Morgan, yeah, pushing higher. Aubrey must be happy. I know Aubrey has this stock in his portfolio. We did break above resistance. You can see it here. Hit our target actually on Friday. Beautiful. So this move is panning out as predicted. Oops. And then we have RMDAX, I believe. Oops. Sorry. There we go. What's going on here? Let me just quickly see. Yeah, also a nice bounce off this level here, the stone brick retrace. Came down a bit on Friday, but I think also here we may see some gap fills above this. So this could be a very nice launch pad to higher price levels, but so far so good. And lastly, Boeing. Yeah, Boeing stays unchanged. It bounced, stayed within its support level. You can see it here right at support. So the idea is that, after this pullback, it's a level 4 pullback as per our trend radar indicator, we may see a bounce towards higher price levels. And one more thing to be mentioned is that I closed out my options trade on WMB, the Williams company. I believe we discussed it 2 weeks ago. So the Williams company, WMB, beautiful trade there. I bought call options when we were down here at this key support level. Why did I buy call options? Because volatility was quite low. You see how small these bars were. If I zoom in a little bit, tiny bars, very low volatility. Option prices were very small. I bought calls, which I just sold as we were approaching this resistance level. So this has worked out beautifully, exactly as planned. This is the idea that when you bounce off the support level, your target will always be just below the next resistance level, where prices may bounce off from again. So that's a trade that worked out quite nicely. All right. So, but of course, today we don't want to gloat. Of course, also in case of BSX, Boston Scientific, also, it's not really gloating. We don't want to review just what happened in the past. We want to look forward of what may become interesting in the future, in the next week, when the market opens. So let's check it out. So, And Homa, before we do and talk about these setups, are there questions right now which I can address real quick? Uh, so I do see one question
Sorry,
from
I was on
Lenny.
mute.
Ah,
Yeah,
no
there's
worries.
an interesting question here from Lenny about German stocks. Would these be a good preliminary indicator of market behavior for US stocks? Maybe just the DAX.
I don't think so. In my personal opinion, I think the German market doesn't have the power to be a driver for the rest for the US markets. In my view, the opposite potentially. If the US market is strong, the German market may catch up to it. I think it just makes more sense because of buying power. But of course, fundamentals is not something that we try to be too much into it. But what we could do, perhaps, Lenny, for our next lunch and learn session, if I get around to do it, is to see if using our TI pairs indicator, if one symbol is a laggard or a front runner for the other one, from a technical point of view, not from like a fundamentals, which industry power is the more leading one. I think it's clearly the US, but from a technical point of view, maybe there's something to be said about this. So this is something we can look into it potentially at our next lunch and learn session on
Yeah,
Tuesday.
I think
Oh,
it's
sorry, on
great
Monday.
to
I should say Monday at 12 p.m. this time. Yeah.
I think that's a great thing to do actually, because the TI pairs can give us some really nice hidden insights. So
If we'll see if that's the case
yeah.
this time, but yeah, we can look at it for sure. Yeah.
And like Daniel said, this week, and actually for the next 3 weeks, I'm going to be sending out an email. The lunch and learn is going to be on Mondays at 11 due to some conflicts.
Yes.
Yeah.
Absolutely. Okay, perfect. All right, so then let's go ahead and scan for some interesting setups for the next couple of days. And I tell you, there are some interesting ones there for sure. So what we do typically is we follow a process where we look at the various setups, and based on what we see is we create a watch list, which I will be sharing with you guys. So you have this watch list also in your account. And then towards the end, we're going to review everything in the watch list to see which are the top of the top stocks to be considered for next week. All right. So with this, let's get into it. And typically what we look for are three different setups. There are so many more setups that you can consider with our dashboard, but what we do typically in these sessions is we look at the bounce setup, a zone break setup, and the zone break retrace setup. And I'm going to start with the bounce setup first. So bounce setups work best, in my view. I'm talking here about the bullish bounce if the stock is bullish to begin with. So if you're looking for a bullish bounce, it does not hurt to have a bullish stock like this stock here, which you can see it's definitely in a strong uptrend, which has been going on for quite some time. It's a long-term uptrend. No question about it. And of course, as a trend trader, there are good times to enter into a trend trade and there are not so good times. So a good time would have been, of course, if we entered on some kind of pullback. You can see these price comes down a little bit. You can enter on these pullbacks. And on Trend Radar down here, we can see these pullbacks very easily visualized by these red patches down here. These are pullbacks within a strong trend. And what would be a bad time to enter is when everything is extended. Yeah, it's very expensive because then the chance of a pullback is quite high. And this is why, for example, I say right now in the SPY or QQQ, things are extended. It's like exactly this moment up here where there could be a significant pullback following. So this is why I'm waiting for these pullbacks to happen before I consider a long position. And ideally, we uh, we want this pullback, this healthy pullback, as we call it, because why healthy? Because it's part of every trend. It's something that will happen all the time. Every trend, even the strongest trend in the world, eventually will have a bit of a correction. And can be very easily explained by human nature, is where investors or algos is simply booking profits. And if somebody is booking profit, he's selling the underlying. And by selling it, you know, sellers will be stronger than buyers, leading for price to come down a little bit. It's just like that. But this happens all the time. It's part of human nature that profits are being booked, or part of trading, I should say. But ideally, we want this pullback to coincide, and this is where the real power of our dashboard comes in, to coincide with a key support level. Now, as you know, support and resistance are two key ingredients of our trading process. And if we can time this pullback with such a key support level, then it will further increase the chance of the stock being bouncing off this level rather than breaking it to the downside. Okay, so how can we find these? So I'm going to go back to our dashboard and we're going to enter these criteria right now. And the first criteria as you remember, was a long-term uptrending stock. So how can we find these? Very easy. We're going to go to our right-hand side here and going to use our MA Rush indicator here. And just so you know what MA Rush does, let me quickly sort my symbols alphabetically. What MA Rush does, it will show you whether we are currently trending upwards or downwards. That's quite easy to see. So here in this case of our COA, you can see currently right now we are in a bearish trend. You can see bearish, price went down a little bit. Or for some stocks, it may say bullish. And we are currently in a bullish trend. So depending on what the last read of this label is on your chart, it shows you your trend direction, either bearish or bullish. So what we then can do is, back in the dashboard, is we can click on the filter icon to the right of our MA Rush column, which is based on this indicator, which I just mentioned, our trend indicator. We can click on it and then select bullish. Once I do this, you can see that every single stock in this list here, which right now it's not filtered, but once I filter, every single stock will have a green arrow pointing upwards. There will be no longer any red arrows. So I'm going to do this bullish, and every single stock now has this green arrow pointing upwards. And we also have a number next to it. And this number shows us the trend duration. So for example, here, let me just find the stock that we know, like advanced auto parts, 23, meaning 23 bars ago, we swapped from a bearish trend, which was a very strong bearish trend, to a bullish trend. 23 bars ago. If you count the numbers from the last one to this label here, you're going to get exactly to 23. And then, what I like to do, and we're going to do this in a bit, is I like to focus on stocks which have been in an uptrend for a long time, because the longer a stock has been in a trend, in my view at least, the more established this trend is. All right, so that was ingredient number one. It's a bullish, all bullish stock. So 2,800 stocks of our 5,600 stocks are currently bullish. Now, ingredient number two is we want to see some sort of pullback. So what I'm going to do is I'm going to go to this pullback column here on the right-hand side, which is based on our trend radar indicator, showing us, okay, which stocks right now are currently in a level 4 pullback. So level 4, what does it mean? For the first 4 rows of our trend radar indicator, they are red. 1, 2, 3 in this case. The fourth one is not red here, are red, and the last one is green. This is what we're looking for, like deep pullbacks, which are still considered to be healthy. So I'm going to go here to my pullback column and select level 4. And now we're down to only 247 stocks. And just to give you an example of how this could look like AEP, for example, American Electric Power Company, you can see right now, even though it's a very bullish stock, we had like all-time highs here, we pulled back 4 levels in trend radar. 1, 2, 3, 4. So we're not so extended anymore. We're actually down now here a little bit. So this is step number 2. And step number 3 is we want this pullback to coincide with a key support level down here, this red area. How can we do this? Well, we're going to go to our Liquidity IQ setup scan here, select the filter, and pick long bounce. Once I do this, we're now down to only 20 stocks. Of our 5,600 symbols, only 20 remain. And this is exactly what I meant by finding the needle in the haystack. Something which you could not have done manually. It's impossible. You can click the 5,000 stocks to find the 20 which actually qualify for our criteria. And there's one more thing I like to do. I like to sort by trend duration. So I'm going to click on this MA Rush column here, sort from highest to lowest. And the first one that pops up is Rollins Inc. Let's click on it. All right. And we can see, once I make this a little bit bigger here, that this is indeed a very interesting stock. Long-term uptrend for 800 something trading days. It's going upwards. We made all-time highs here at this key resistance level in August this year, but now in September we pulled back towards this key support level. And to me, this is a very interesting long entry opportunity. Anticipating we're going to be bouncing off this level, at least towards this resistance level here around 559. So definitely an interesting one. I'm going to add this symbol to our watch list. But before I do this, 2 quick things. I'm going to set my background here to black, so it just makes it a bit more easy to see for you guys. I'm going to hide my grid lines as well. Okay, so it's a bit easier to see. And then I'm going to create a new watch list. You can see we do have a couple of watch lists created here. I call this the weekly swing trades. So we're going to create a new one. weekly swing trades, Colin. 2025, 09 for September. And what date is today? Hold on, let me just quickly see. It is the 20th. Yes, of course. Okay, perfect. And create. All right, this has been created. I'm going to add this watch list to this, this symbol to this watch list. This fits correct. Okay, done. It's been added. And one more thing I will do is I will now share this watch list with you by clicking this little share button here. It's being shared, so you should see it in your account. Now you may need to reload it for this. I'm going to unshare the one from August 17th because it's no longer relevant. Perfect. All right, done. Okay, so warrants have been added, but we're going to move down with our list here. So Coca-Cola HBCAG, I think that's the, oh boy, I'm going to skip this one. This seems way too gappy for me. This is probably a stock not traded on the New York Stock Exchange. Long-term uptrend nonetheless, but it's too gappy. I'm not so interested in this one. SOL.AX, the Washington H. Soul Patterson and Company Limited. Oh boy, what's happening here? Look at this one. Huge move down. It's a long-term uptrending stock, but I don't know what happened on that day here. This was not an earnings date. Earnings are coming out on or next week, actually, as per our corporate actions indicator. You can see it here, but huge downwards move right to this key support level. You know, it depends a bit on how the market opens. We also have a liquidity capture at this bar here, but I do want to see at least some sort of slowing down on Monday when the market opens at this level. Before this, I would not enter into a long position here, but nonetheless, it could be an interesting one. This Australian stock to speculate of a bounce off this key support level after this big bearish bar here from 43 down to 40. So we lost like 6% on um yeah on Friday. And let me just quickly show you one thing, guys, before I add this one to our watch list, is that we do have a daily percent change column here, and you can see here we lost on Friday this big bearish bar, this big bar here, 7.23%. And this can be seen here in this column, 1D percent change. So 7% was lost on that day. And I'm saying this because you could use this column to scan for stocks which had the biggest move since for a given trading day. So on last Friday, in this case, the biggest winners and the biggest losers. So this definitely probably was one of the bigger losers that day. But nonetheless, I'm going to add it to our list. But knowing that I do want to see a bit of a slowing down on Monday when the market opens before I consider any trades for this one. And one more, perhaps the EPOL, the iShares MSCI Poland ETF. Let me have a look what's going on here. Yeah, also a nice bullish symbol here. We lost the support level at some point, came back above, now going down again. A long-term uptrending move here. And yeah, once again, this could be an interesting symbol to potentially consider a long trade after this pullback to this key support level. Which kind of also coincides with this former resistance level. So these two levels are nearby. Oftentimes this further strengthens this particular level we are right now. So I'm going to add this one as well to our watch list. All right. But of course, this was a very strict criteria. So we are looking for a level 4 pullback in a long-term uptrend right to a support level. Let's loosen this criteria a little bit because sometimes it is not needed to have 4 levels downtrend radar. Sometimes, a smaller number is sufficient as well. So what I'm going to do is I'm going to remove our trend radar filter here, the pullback filter. I'm going to clear it and say no filter. And now we're going to focus on the ones that simply are long-term uptrending and coinciding with a key support level. The first one that comes up here, for example, is this Indian stock here. I think I'm going to skip this one as well in healthcare. It's near support, but it's coming from below support. I don't really like this too much because ideally I want support to be approached from the upside. In this case, support has been broken in the past. It has weakened this level. We're going to skip this one for now. Reliance is the next one. Okay, Reliance is interesting. Also a big drop here. We stopped right at this support level. We have earnings coming up in October. There's still some time here. But here it would be interesting to see if we Yeah, if we can hold this level, looks a bit like a flagging pattern to me. Big downwards move here. This would be a flag, the upside down flag here, basically. And I know we discussed this previously. I'm a bit hesitant to add it to our list because it just seems a bit too volatile for me. And even in the past, if you go back uh, further down, we've been way past this level many times in the past. So this consolidation pattern in which we are right now, to me, it still seems like price is kind of in the middle of this bigger pattern of consolidation. So this could mean that we're gonna go a bit further down. And for this reason, I'm gonna skip this one for today. But nonetheless, kind of an interesting setup, but not the one, not the cleanest one, at least to my taste. GLP, what is this? GLP is Global Partners LP, and this one is definitely more interesting. Look at this. We are approaching support from the top. It hasn't been broken yet. We're coming down to the support level. We are in a long-term uptrend, and potentially, even though things are getting very compressed here, this could be an interesting long trade here as well for the next week, especially since we're right at this support level. And we also did have, you can see it here, a liquidity capture event on the last bar. So potentially a good sign that we maybe bouncing off this level. The only thing I really don't like about this is very compressed, and our resistance level is right here at 52. So there's really not much room for a long bounce. We may just bounce up towards this resistance level, but there's not that much to gain. So for this reason, I'm going to skip this one as well. And let's go one more time here. Energy transfer, ET. All right. What's going on here? Let me just zoom into this chart. Okay, let's see where we're at right now. Yeah, it seems to be also compressed right now with making lower highs along the way. And actually, just by looking at this from a technical point of view, this looks to me, just move this a bit over here. This looks to me like a descending triangle. I can see it here making lower highs. And if you want to put your baseline here for the triangle, kind of a descending triangle, which, is kind of a bearish longer term pattern where we see a break below this level. Also gonna skip this one, but perhaps one more. Let me just go one more before we get to the next setup is TGS. Okay, that's more interesting. That's more a setup that I would prefer. Look at this one here. All right, long-term uptrend. We gapped down a couple of weeks ago from this level here all the way down to this level here around 22, and we stopped at this key support level, which also coincides with this former resistance level back here. So to me, this could be an interesting setup especially also since there's a gap yet to be filled. So in order to test this gap here, we would need to come up all the way to 26 from 20. So to me, a nice setup. Also, we had a liquidity capture on the last bar. So I'm going to add this one to our watch list. Perfect. All right. So this completes our bounce setup, and you can see how easy it is to find yeah, these kind of setups just by simply clicking through the best hits that you are getting using our dashboard. And Homa, are there any questions about this setup before we get to the next one?
We do have a bunch of questions. I'm not sure if they're specific to the setup, though. Did you want us to go through them?
Sure, let's go one or two questions just to take a little break of just scanning. Yep.
Okay. So Lenny wants to know the liquidity capture versus the support level and how these two things interact.
Yeah, Lenny, it's a good question. And there's actually a correlation between the two. A couple of things. First off, liquidity captures and support levels and also resistance levels, these are all found by the same indicator. So the indicator is liquidity IQ. Let me just put this on the chart. So this indicator here, which shows us all this information. So they all come from the same indicator. That's number one. Number two, there's also a strong correlation between a support level and price being near a support level and a liquidity capture, in a sense that a liquidity capture event can only happen if price is either near support or near resistance. There's no other way that this can happen. Look, while we were in here in between resistance and support, there's no liquidity capture event whatsoever. It cannot happen anywhere else. Price must be near any of these extremes, any of these key levels. That's the only place where these ones can happen. And then a couple of other conditions must come together for a liquidity capture to happen. So the first condition is that we must approach support or resistance up here, and we do not break it. So we're approaching it, but we cannot penetrate it. We cannot break it. So this candle could not break it. It stopped there. And secondly, this candle must have shown us abnormally high volume. And for example, when this happens at support, one could argue, well, the reason why there's big volume coming in or more volume coming in is that buyers are stepping in, purchasing the stock and in the aftermath are indirectly driving price higher up, thus increasing the chance of a bounce um, rather than a break of this level. All right. Maybe one more question, Holmes, before we go to the next setups.
Okay, I'm trying to see which one because there's a bunch of questions about watch lists. So maybe we leave that till
Yeah.
after. Let me just see. And some formatting issues. Okay. So Sammy's saying if something's going up for 600 days, let's say versus less time, 30 days,
Yeah.
he thinks the probability for the 30 days would be higher, assuming
Yeah. Yeah.
fundamentals is equal for both.
That's
Will
that's
this be interesting to visit if it was short-listed 2 to 4 weeks ago?
yeah, it's a good question, and it's we've had this question a few times, and I completely understand your logic, Sammy. So, because you're saying, I'm just going to give an example from the casino world, and please don't hold me to it. I don't think trading is gambling at all, but I'm just going to make it into an intuitive interpretation of this. So if you're at the roulette table and you see like 10 times red in a row, you must say, "Oh my God, the chance are for this coming to an end right now must be higher than perhaps you only see a streak of two." In my view, on the casino, of course, that's not true because they're all unrelated events. But I think, and for trading, it also is not true. In fact, I believe that the longer a trend continues, the harder it will be to break the trend. So to me, it's a sign of strength if it's been going on for a long time, rather than a sign that, hey, it's been going on for 2 years, it's time for it to change. So, but I completely see what you're saying, Sammy, that, if there's a fresh trend in place and, maybe that this one has still has a lot more legs to run than a trend which has been out there for many, many years already. But again, my view is the longer a trend continues, the stronger it is. But again, that's a personal question, a personal preference. All right. Holmes, let
Moshe,
me,
yeah,
yeah,
just one last question, and then I
okay.
think we can move on. We
Hmm.
still do have a bunch of them. We can get to them later.
Okay.
But Moshe wants to know, he has MA Rush on Liquidity View, but he
Hmm.
also has it on his own platform. So what's the difference? And should he be using both of them?
Oh, I mean, if you for swing trading purposes, I think it's completely sufficient to use it on our Liquidity View dashboard, which operates on an end of day basis, which is perfect for swing trading. If you're a day trader, of course, you're looking for small moves in the day, then you absolutely need intraday data, and you need to use the MA Rush indicator on that platform where you have intraday data, like TradingView or Thinkorswim or whatever it may be. All right,
Okay, thanks, Daniel.
perfect. Okay, cool. So let's quickly move to the other two setups, which I like to always scan for. And the first one is our zone break setup. So at some point, everything will come to an end, unfortunately. So every support level will eventually be broken, and every resistance level will eventually be broken to the upside. But if this happens, also new opportunities are opening up for us because in that case, we could simply scan for or anticipate that this breakout move, I should say, this breakout move will continue in the direction of the breakout for quite some time. That's the classic breakout trade where you enter in the direction of the breakout. For example, here, if once resistance was broken here, yeah, at this point, we could anticipate, okay, this breakout move will continue a bit longer. But we're going to summarize these two setups into just one, is be aware that after the initial move upwards, oftentimes the market tries to fake you out by coming back to the broken resistance level. Uh, But stopping there. And oftentimes this broken resistance level, this former resistance level, will now act as support. And this could be a great launch pad for the actual breakout move to start. And how beautiful this can be, I'm going to show you by a trade that we picked 2 weeks ago. I'm going to go down to the ones from September 6th. That was our scanning session 2 weeks ago. And look at these two patterns here. It happened to be in both in Australian stocks. So GDG.AX. Look at this one. Perfect. Um, Breakout above resistance at this point. We came up, breakout of the market, came down to the broken resistance level, and then this huge launch pad move afterwards from this broken level. This is a dream scenario. Of course, it doesn't always work out like this, but this is a setup which I love to scan for, which I love to trade. In fact, let's start with this one right off the bat, Rob, because it's very rare. But since we're scanning through 5,500 symbols, there are always some of them which will qualify for this setup. So I'm going to go to our end of day scanner, scanning through 5,600 symbols, and I will now enter into our Liquidity IQ setup column here the criteria: long break retrace. That's exactly what it is. We broke above resistance, but came down, retraced down to this level. So long break retrace. And you can see only 24 stocks qualified for this. So of all the stocks we just scanned through, just with one click of this filter, we're down to 24. So let's see what these ones are. So I'm going to look at, in fact, something I also would like to, I always want to switch on here is our MA Rush filter to only focus on bullish stocks. But let's just see what we have here at the beginning. So INBX, a stock in the healthcare sector. All right. Of course, healthcare has been struggling a little bit, but also, yeah, you see it here. Yep. Zone break came up, down to it. We are not close enough to it. So to me, it is a nice bullish symbol. We came up, but this move downwards is now a bit too far away, so I would not get into this trade now. If anything, I would potentially wait for a move down towards this level, and then maybe consider a long entry here. But nonetheless, it's an interesting one. Zone break, retrace. Let's add this one to our watch list. Nonetheless, if we get our fill down there. VZLA. Okay, whatever this one is. It's a very cheap stock. I'm probably going to skip this one. And yeah, we're too far away. This move already happened. But you see the picture. Zone break, retrace, and then it goes off. He was just one day too late. All right. Next one. AN. That's the stock alternation, which we picked last week already. We're waiting. We're still in this vicinity. I think it's an interesting long trade idea after the zone break retrace. So let's add this one once again to our watch list. Okay. Next one. And this is something which we don't see very often. A currency pair, Euro CAD, qualified as well. It's a very bullish pair. The euro has been very strong compared to the Canadian dollar for quite some time, and in general, actually, compared to many currencies. You can see it here. We broke several times above resistance, but most lately also here on September 8th, the initial move up now retraced down to this level, which could be, strategically speaking, another, a launch pad for another leg further up. But since we're not trading currencies here, especially not swing trading, we're going to skip this one for our watch list. And then one more, we have AER, which is the American, AirCap Holdings. In fact, let's check it out here. Yep. Beautiful zone break, retrace, a little gap here. So we're not close enough yet to our entry zone, but I can imagine that we will fill this gap here. You see this gap from there to there? If we come down to this level, this could be our entry zone. If we get there, this could be an interesting long entry opportunity as well into this trade. So I'm going to add this one to our list. Okay. So that was the zone break retrace. And of course, what you can also scan for, but we need to, when nearing the 1 hour mark, and I do want to go through some symbol requests as well. What you can also scan for is to simply focus on the actual first breakout, this symbol here. So how can we find this? I'm going to clear my filter, go to my Liquidity IQ setup column here and select long break. Once done, we can see all the stocks which are currently trading above their resistance level. For example, this one here, CBO.EX. For a long time, this stock has been trading above its resistance level. Here was the break, that big move up. But of course, right now, this is way too late to enter here. Everything's extended. I want to find stocks where this break just recently happened. So how can we do this? Well, we sort by this number here to the right of long break. So right now it says 55. It means it happened 55 bars ago, very long time ago. But let me start from low to high and focus on the ones where the zone break just recently happened. Like this guy here, FTC Solar. Let's check it out in the technology sector. Yeah, you can see it here. We broke above resistance at this last bar. Now, these are the ones where you could then anticipate maybe you're going to see a nice follow through afterwards. I'm going to skip this one because we already have, I think, enough stocks for today. But this is a very easy scan which you can run. Another interesting one is this one here, Alamos Gold. Yeah, long-term bullish. We just broke. Oh, in fact, actually, this was a more of a zone break retrace. You can see it here. Broke above. Down here, we actually went a little bit below. That's why this one qualifies for another breakout signal here. But in fact, this yesterday could have been a beautiful, well, not yesterday, on Thursday when the market closed on Thursday. This could have been a beautiful zone break retrace setup. Exactly the one that we discussed before. Okay, so let me summarize what we have found so far. I'm going to go down to our watch list, the weekly swing trades. I'm going to clear all my filters and let's see at these, let's look at these 7 stocks that we have. And in fact, one thing I want to add to this is our Russell's trade, or IWM. So I'm going to add this one, IWM, the Russell, to this watch list. Done. Perfect. Okay, so for the Russell, what's the idea here? And again, I need to stress this, guys. This is a very speculative trade. If you want to do it, you could potentially play the bounce here off this level towards lower price levels, knowing that this goes against our overarching trend, knowing that the markets are so bullish right now. This is a contrarian trade, but since this has been such a strong level, I think it might be worthwhile a shot. But of course, please risk manage it. Use put options where your risk is very well defined. Okay, so I'm going to add this one to our trade now, just so that we can keep track of this trade. But please, please, please keep in mind this is a very speculative move. Okay, so I'm going to add this one to our list here. I'm going to put the screenshot here so we don't forget what was the idea here. All right, moving on. AirCap Holdings, yes, for a short, no, for zone break retrace trade if we get to this level here. Yep, I like it for a long entry here. If we go a little bit lower, this could be a launch pad for another leg further up. So I'm going to add this one as well to our watch list. There we go. And every time I put a screenshot of today's date, it means that yeah, these are the ones which are more closely in my list for Monday. All right, next one. INBX. Okay, what's going on here? All right. Yeah, also interesting one. Let me just see when this loads for a zone break retrace. Yeah. Just quickly see. The only thing I don't super like. Oh no, it's fine. No, it's all good. Yeah. Yeah. Zone break retrace to this level here if you get to our entry zone. So I'm gonna add this one here as well to our trade notes. Okay. We have alternation next. Oops. Alternation, of course, we already had it the day before. We are right in our entry zone now. I'm not gonna add a new screenshot of this. I think it's exactly the same picture as last week ago, where we were also exactly at this level. The setup still is valid for a bounce trade off this former resistance level towards higher price levels. So I'm gonna keep this where. ROL. Yes, Rollins Inc. Yeah, I like it. It's a nice trade because kind of a nice consistent uptrend to the upside. We just filled this gap here, which is done now. Check, gap is filled. These gaps, they sometimes take some time to get filled. This is done now. Right at the support level, I think this could be an interesting long bounce opportunity. So I'm definitely going to add this one to our list or to our annotated list. So put the screenshot here as well. All right. Okay, SOL.AX. Big move down. Here, I definitely want to see some kind of confirmation. If I don't see the confirmation around this level, let me just actually annotate this real quick. So I want prices to come up a little, some bullish signs that this level will actually hold. We're not just gonna pacing through it. So I wanted things to slow down here, maybe move a little bit up before I consider any trade. But just to keep track of it, let's add this one as well to our list. There we go. All right. And two final ones. The Poland ETF. Yeah, it's a bit too kind of too gappy for me, but you know what? Could be an interesting one. Level 4 pullback on trend radar right at the support level after this initial zone break here. Above this former resistance level coming down and kind of coinciding with this resistance level as well. Now let's add it to. Let's just see how this one goes. Perfect. All right. And finally, we do have TGS Transportada de Gas. Okay, that's I guess, in Argentina or something with a nice gap here right at this support level. Let me just quickly see where we're at. Yeah. Yeah, could be an interesting one right at this level. Also here, I would like to see this level to hold. We do have a liquidity capture at this last bar. Yeah, potentially interesting. So also here for a long setup. I'm going to add this one as well. So I think we do have some really interesting stocks here that we can consider. Perfect. Alrighty, Holmes. Any questions so far? I think this is a nice watch list for next week. I'm excited to see what will be going on. All right. Homa, are you there? Okay, well, let me just quickly go
I
through
am
my.
here
Oh,
just
yeah.
answering
Okay.
some questions in chat.
Okay.
Did you want us to go through some of the watch list questions now?
Let's do it. Yeah.
Okay, so is there a way to edit a dynamic list after it's been set up?
N No, you cannot edit. You have to recreate it. So once you create a dynamic watch list, uh, let me just show you what it is. So let's say you have a dynamic watch list for stocks, which are, I guess, just making something which are bullish and maybe a level 4 pullback and coinciding with a key support level long bounce. So you have this nice watch list of 20 stocks. You can create this pullback stocks or whatever you want to call, or long bounce with pullback. You create it. It's not created based on these three criteria, and it's going to be here in our list here, long bounce with pullback, this one here I just created, you can't edit this anymore. So even if you add new filters here, these will not be remembered. So the only way to edit this watch list is to delete it and recreate it. All
Okay,
right.
so Moshi is trying to get alerts for long break retraces,
Mm-hmm.
and suddenly he stopped receiving them. So can you go through that process, please?
Yeah, but the process I think is always based on a dynamic watch list, and then you go to trade alerts and you click here and pick the watch list, the dynamic watch list that you want to get the alert from. So, for example, long bounce with pullback. And of course, make sure your the setting here is enabled, and then you it should be working. But we did have a technical issue at the end of last week, which I think prevented this alert email to come out. We are currently looking into it. As mentioned at the very beginning, our dev team has been on vacation last week, so we couldn't get this fixed quicker. But this should be fixed, Marshy, very soon. I believe by Monday it should be done and fixed, and you should be receiving alerts again. Okay. So please just hold on for, stay tuned for this one, Moshi.
How do you decide where you take profit in your stop loss lies?
It depends on the setup, but in this particular case here for this stock, for example, I just use my common sense. So here my stop loss would be below, somewhere below the support level. Depending on how much I like the stock and the setup, either it's going to be right below the support level, or sometimes I'm going to go one support level lower, like this one here and put it here. Of course, that would be quite a way. So in this case, for sure, it would be closer by. If I'm wrong, small loss, no harm, no foul. For my target, again, if you really want to go for the big run, then I would put it just below this resistance level here, which can take some time to fill. But if you want to go for the quicker one, maybe in this case, I would just put it here at the upper end of this gap. I think this gap fill is something that's quite likely. So, but often it's after a gap fill, there's another leg further down because that gap is now filled. So an aggressive target would be something here about 26, a more a long-term target maybe around 29, right below this resistance level.
Okay, so Moshe clarified his question, and Moshe, don't worry, we're here to answer all questions, so don't worry about that. He says that, so that's true. So he's talking about specifically our dashboard, not an external platform. He has both indicators, Liquidity IQ and MA Rush, when he's viewing it. And
Mhm.
the Liquidity IQ has three moving averages, and the MA Rush has three lines. Do I need them both on the screen because he finds it confusing, or is it just MA Rush that's better to use?
If you use our dashboard, Moshi, you can even remove all the indicators from the chart. If you define your alerts, they will work no matter what, whether there are any indicators on the chart or not. It's simply based on the criteria which you use in your scanner. Um, that's it. And based on which you create your dynamic watch list on. It doesn't matter what indicators are on the actual chart.
I think it would be also wise. Is there a simpler way to view the dashboard? Because perhaps it's the many lines that are, uh, like, is it possible to simplify that view, Daniel?
For liquidity IQ, no, that's just all the levels it finds. It's just the way it is. But what you can do is you can get rid of some of these labels here, which if they're too cluttering for you. But the liquidity IQ indicator, no, it shows you all the resistance levels and support levels that it can see, which gives you, I think, a context. And oftentimes, you know, when I see something like this, for example, support level, which is this little red line here, and then right below there's another one. Oftentimes it's the second one, which is the more powerful one. So I really do want to see all these levels because it will allow me how much room I would need to give a trade, especially if two levels are very nearby. Oftentimes price will go right to the second one, to the lower one. So it's important to have this context.
What about for MA Rush, Daniel?
No, also it's always it's the visuals are pretty much pre-configured for those ones. Yeah.
Okay. Moshe, if you have any more questions, please email us. I have some ideas about how to simplify the chart, and I can get back to you
Yeah.
uh, personally on that. Um, okay, can you please explain, Daniel, what you mean by too gappy?
Oh, on that Polish stock. Yeah, let me just go. What was it in our watch list? It's just yeah, EPOL. It's just the bars are not very connected for this one. So you can see here there's a gap here. Let me just take out MA Rush here so it's a bit easier to see. See how many gaps are in between these bars? That's what I meant by this. Meaning that between market close at 4 p.m. and market open, lots of things are happening and you as a trader can't really react to it because the market is completely closed. It's definitely a stock which is more on the risky side because of all these gaps. Because, while the market is closed, you kind of can't do anything and then you may go up or down gap wise. So I personally oftentimes prefer trading stocks where we don't have that many gaps all the time. That's all I meant by this. These gaps between the bars. If you contrast this to the GLD, the gold ETF, for example, it's a big difference. I hope I'm not contradicting myself. I'm just guessing it's very different. Ah, there's some gaps here too. Okay, maybe it was just a gut feeling because it just felt. But yeah, you're right. There's also some gaps here. Okay, I'll rest my case. Maybe it's just a common thing with stocks which close at 4 p.m. then reopen at 9:30.
Okay, so what's the difference between a healthy pullback and a breakdown? And what do you look for to figure out the difference between the two?
Yeah, the healthy put to us is just anything that doesn't go all the way down in trend radar. Like here, we stopped at level 4. But the long-term trend, which is the last row in trend radar, still stays within the overall trend direction, which is bullish in this case. These to me are healthy pullbacks. If it gets more than this, like all 5 levels are green, then it's definitely a deeper pullback. And it's not completely in line with what we may expect with just a trend just correcting as part of its normal behavior. So we, in our book, pullbacks that stop at level 4 are considered healthy. If they go all the way down, everything gets red here, then it's a bit deeper than what you may expect of in a strong and consistent uptrend.
Vince has a question from a while ago. I'm not sure which chart he was referring to, but he's saying, do you look at volatility high or low?
Yeah, it depends. Sometimes, well, first of all, we do have a column called volatility in our scanner, which can be enabled here, which is based on historical volatility. So it's not implied volatility. We don't have the data read right now. It's based on historical volatility, and it shows you, okay, how volatile is this stock compared to what it normally goes through. And I use this sometimes. It's not a good symbol. Let me just pick a good, better one here. Maybe this. Actually, let me just sort alphabetically. So this one here, maybe is this a better one. I use this sometimes to get me a bit of a read on how expensive options would be right now. But of course, I will always confirm this with a live data feed, either Interactive Brokers or Thinkorswim, to see what's the actual implied volatility right now for options trading. And if that implied volatility is above the average implied volatility, I would rather consider like an option selling strategy because option prices are quite high. Maybe I want to sell options rather than buying options. Now you can have the same setup. Hey, this is a bullish play. You can either trade it outright at the stock, but if you're an options trader, you could buy call options. But if call options are very expensive because the implied volatility is above its average, for example, maybe it's a better idea to sell puts instead. It's the same trade to the bullish direction, but one may be favorable over the other ones depending on how expensive option prices are. So yeah, I do consider it. And this volatility column here gives me a first read at what might be lower price right now in terms of option price and what might be higher priced.
Is it possible to arrange the columns for a price level and volume of a symbol beside each other when you have all the columns checked?
Yeah, right now it's not. You can't change the order of the columns. All you can do is to yeah, hide and unhide them, but you can't change the order right now. But that's something potentially we're going to be adding. Mhm.
William is asking when we're looking at resistance, he says here 50 or 100 days moving average.
It's neither. We have our own proprietary logic to find these key support and resistance levels, which are based on a multi-time frame analysis using something we call multi-time frame fusion, then looking at some other things like volume significant swing points and so forth. So no, it's not based on these MAs.
Okay. Sammy wants to know if we can visit the old watch list so we know what percentage of the short list really did go up.
Yeah,
And
we're
is that
sharing
something
them
we
all the
can
time.
do? Okay.
Oh yeah, actually the last five ones, they're always shared with every user. You can see it here. Yeah, just log into your account and you should see the last five watch lists, the weekly swing trades.
Right. He just wants to know if we know which ones, if we can anecdotally say which ones went up or if they do go up in general, or is that
Yeah, we
something he
just
should do on his own to
yeah,
go
we
through
just did
them?
this. That's right. So yeah, do it on your own, but also in the beginning of every scanning session, we did do a quick review of what happened last week. So we do this anyways. Yeah, in the beginning of the scanning session on Saturdays, we do a quick recap of what worked or didn't work out last week.
Yeah, so Sammy, if you did miss that beginning, you can just I put the link in chat where
Yeah.
the recording is available and you can go take a look at that.
Hmm.
We have a few symbol requests. Did you want to get to that now?
Yes, let's do it. Mhm.
Bappa wants to see NCLH, please.
All right, let's go back to my scanner here. NCLH. Okay. On the magnet zone, bullish of 455, 45 trading days, currently in level 3 pullback. Yeah, interesting one. We bounced off resistance here. So even though we are bullish, we bounced off resistance, and this is kind of the trade I have in mind for the IWM2. We're bouncing off this resistance level towards the middle in between. Yeah, now we have our pullback. So if you believe in the stock, maybe now it's getting more interesting to potentially scale into a long position. Even though if I just scroll back a little bit here, it seems a little bit like very wavy to me. So this bounce of the resistance may actually go a bit deeper. So I would still be careful. It's not my favorite setup, but at least now we had this bounce of resistance, and now maybe it's a better time to potentially enter into a long position. Yep.
Okay, another symbol request.
Hmm.
Stefan would like to see SFM,
Yeah, my arch
and
M.
he said he just
Yeah.
filled the October 2024 gap.
Yeah, yeah. It's crazy to me how bearish sprouts farmers markets have become. But yeah, you're absolutely right. I know you're talking about this gap here. Big gap down. This was filled. And again, this shows you the power of these gap trades that, even over a really long period of time, these gap fills may still be happening. I don't know. I lost a bit of faith into this symbol. We had our bear flag here. You can see it here, which we broke out kind of as predicted at this point to the bearish direction. Will we stop here now after this gap fill? I don't see a technical level nearby. So the next one would be perhaps this one here from this old resistance level at 100, but I really hope it's not going to come all the way down here. Yeah, it was one of my favorite stocks at the time, which was a beautiful uptrend for a long time. I'm not sure why they're being hit so hardly. It's just a stock that just kept going on like very smoothly in one direction. Now this big breakdown. The only thing that keeps me into this stock is that we are still bullish. So, Emmy Rush is still bullish. We're correcting down. It's just a way deeper correction than I thought. And now we are, yeah, way past our three Emmy Rush lines. We filled this gap, and maybe, yeah, this could be now the time where we finally will stop and see this correction come to an end. But yes, definitely, it's a bit of a concerning stock to me now too. It's been just losing, losing, losing in the last couple of weeks.
Can we take a look at AAP?
Yeah,
The question here from Lenny is it looks bullish before the bullish flag, and is he misreading the chart?
let's have a look. Yeah, it's too, well, let's have a look. It doesn't look too bullish to me, Lenny, to tell you the truth. Look at this huge move down. This kind of smells like this is just a correction of this huge bearish move to the upside before another leg further down. So I don't see this very bullish. We may be bouncing off this support level, but I think this is all going to be short-lived. Similar to Volkswagen, uh, we discussed it just before this webinar with our German-speaking webinar. Uh, we warned a couple of weeks ago. We recovered a bit from this big. It's also very bearish. Let me give you some context here. Big move down just in one direction, down, down, down. And we recovered a bit from this level here, 81, all the way up to 100. But we warned last week and the week before, hey, we are approaching this key resistance level. This could just be a correction with that really bearish move, and then we're going to see another leg further down. Kind of looks the same for AAP to me.
I'm not quite sure I understand Lenny's question. It's the very last question if you want to take a look at it, Daniel. He says, no on AAP. I'm talking about the brief period in June. Perhaps
Okay,
you can clarify it, or I'm not sure if you.
let's have a look real quick. Yeah, it's a little bit hard to just express some context of these quick in June. Yeah, but would I have gone long here? No, I would not. This to me is not a move which you could have expected. We broke below support here. We just stopped at this level 29 for whatever reason, and then we corrected a bit upwards. But no, to me, this bounce upwards, at least with technical analysis, was hard to predict.
I think what he's saying is AAP looks bullish in June, but then there was a flag. There was an indication, some indication on it. So he got confused about that.
This flag here up and down. Yeah, I mean, this is a short-term technical bullish pattern, but the overall context here is just bearish to me. But yeah, I guess this one here could be seen as a bullish flag with a small breakout afterwards.
Okay. Tesla, please.
Yeah, Tesla is still interesting. Beautiful recovery of the after Elon Musk left the White House. So, uh, huge move downwards towards this key support level. It held beautifully, and then we completely recovered. Now broke above this intermediate resistance level here, I think last week, and now we're in between these two levels. And I think, an approach towards this all-time high level at 489 is not out of the picture, even the next couple of weeks. Yeah, it looks bullish to me. Absolutely. Of course, there might be a small correction down towards this broken resistance level, like a zone break retrace, but overall, this looks bullish to me now. And just
No,
one more thing, look at how our MA Rush indicator did not change its mind. Even after this huge pullback after the all-time highs, we stayed bullish, in this case, rightfully so, because we fully recovered almost. All right.
Uh,
Nice.
Dominique would like to see HNR1, Hanover Rueck SE, please.
Yeah, a German stock. Insurance company. Let's have a look. What is going on? Yeah, here also we are approaching this key resistance level. It seems to be a strong one. Lots of similar levels around here. It's a stock which has been trending, I believe, upwards for quite some time. Yeah, yeah, bullish stock at this key support. I like it. I like it for long. Yeah, ideally, of course, you would have entered somewhere a bit lower, but I do like it for a long bounce at this level. All right. Let me go to my Q&A as well.
Let's take a look at BMNR. Daryl would like to know.
Yeah,
And I think we're going to have to start wrapping it up. It's already 1:25.
yeah, and I know Homa has to go drop her kids off quickly, and I also oof. Yeah, so BMNR, these things they're hard for me to analyze because there's so little uh, historical data available. All I can see here is that we are at this resistance level, which may create a bit of a bounce, but overall it's a bit hard to analyze from a technical point of view what BNNR would be doing. Or maybe just maybe two more.
Yeah,
Uh,
let's look at TTW, please, for Dominique.
TTW. Yeah. Okay. Long break, a breakout stock. Yeah. What's take two interactive? Yeah. A nice one. Broke above resistance 5 bars ago. Move up. Still, I think you may want to be careful for another deeper pullback towards this level here. Zone break retrace is always something that is in the picture, especially after the initial breakout move, which is in progress right now. But entering right now, I think either it's a bit too late because we're away from this resistance level, the broken level here, and there's a good chance that we may see a bit of a pullback. But if we come down to this level, this could be a nice zone break retrace entry potentially.
Okay, and let's take a look at, let's see, PPC, please, for Bappa.
Yeah, PPC, Rights, Pilgrim's Pride Corporation. Alrighty. Oof. Yeah, that was on our list too. We lost. Yeah, I think all the retailers in the food space, like Sprouts and PPC, they're struggling right now. So yeah, we lost support here. Uh, yeah, now we're right at this former support level down here at around 40. A bit hard to say. It smells a bit bearish to me. So I was hoping that this support level would be holding, but now it seems to be breaking down. Similar to Sprouts Farmers Markets. Not sure what's going on there. I think that all the food space, consumer defensive, they are struggling right now. Um, so yeah. But by the way, this is a great example why we do have the sector information here because you don't want to put all your eggs in your basket and have the same long setup traded on multiple stocks within the same sector because to some degree the sector there's a correlation between the sector dynamics and the stock. So if you're trading only in that sector, it might be against diversification.
I'm going to only take two more questions, and then for the rest, please email us, or there's a
Or
lunch
keep
and
it for
learn
the
on
next time.
Tuesday, or keep it for
Exactly.
next week. Yeah.
hmm
So Gerald wants to know how you can tell if an older line on the chart is an old resistance support or only a liquidity capture.
Oh, these lines, so if it's an old level, you can see it will stop at some point. Like this red line here, Gerald, you see this? It's maybe a bit hard to see, but see this red line here? It stops right here. It's hard to see. That's kind of an old level. The indicator stops drawing it, but I still sometimes look at these older levels because they may have still a bit of significance in terms of support and resistance. Um, so for example, for Pilgrims Corporation, you can see here, if you look careful, that was an old level here, this red line, and price right now is at this level here. And one may argue that maybe that now could be the line in the sand where this bearish move will stop. I still think this is going to be a stock which will continue in the bullish direction in the medium term, but just it's hard to predict right now where these big bearish correction, this is across the board, Sprouts and PPC and so forth, where this will stop.
And Aubrey, thanks for the observation. So he's saying an ETF tends to be more gappy compared with stocks,
Yeah,
such as gold and
yeah.
e-polar ETF. Yeah.
Yeah, that's true. Yeah.
Okay, I think we're good, Daniel.
Great. Well,
And
thank
for
you so
anybody,
much.
if we didn't get to your question, please come to our next sessions or email us.
Yeah, let me just quickly put the slides back on real quick. Reminder that we do have this promotion going on right now for a very limited time. If you want to get the Liquidity View dashboard for the annual plan for only 697 instead of 997, go to tradingindicators.com/view to sign up for this by using the discount code FLASH30. And if you are already on the annual subscription and want to have an early renewal for this discounted price, send us an email at our home our homepage. Oh, this is the wrong slide set. 1 second. Where do we go? Sorry. This happens sometimes. Wrong slide set. 1 second. I need to find the proper slides. There we go. Okay. Sorry for that. Yeah, if you have any questions, please, or if you want to do this early renewal, reach out to us via our homepage, tradingindicators.com. Go to support and contact, put your question there or your request there, and we will make it happen. And the same holds true for any other questions that you may have. So we'd be happy to get any of your feedback, and we answer all our questions personally. With this, guys, I wish you all a great Saturday, and yeah, hopefully see you soon. See you on Monday at our next Lunch and Learn session. This time on Monday for the next 3 weeks because of scheduling conflicts. It's going to be Monday at 12 p.m. Eastern time. And an announcement will be sent out to everyone by email to yeah, let you know how you can join these Lunch and Learn sessions. With this, guys, have a great weekend. Thank you, Homer, so much for being here and talk to you soon. Bye-bye.